Hello traders, hello everyone, my name is Gregor and welcome to our new update Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the 10-year US notes, euro, dollar, yen, gold, crude oil and the S&P 500. Now the 10-year US notes are trading higher. Um, However, we have seen some sell-off on stocks over the last few days. This sell-off has even resumed after a good non-farm payrolls report on Friday. So there's still some speculation that maybe Fed could stay a little bit more aggressive with hawkish policy. However, Powell mentioned last Wednesday that they will be slowing down the hiking pace here. So it definitely should be very interesting going forward, especially in 2023, when I think that Fed will obviously at some point stop with hiking rates while other central banks are still lagging. So in my opinion, there's still more upside potential on those majors such as euro, pound, and others. However, what I see here on the 10-year US notes at the moment is that we've seen a very nice reversal, very nice recovery here from that low that actually showed up after 5 waves down and broken trend line here. So what you will usually see is a very nice recovery back to the previous lows here. That was also a resistance here in October. So it's a very important key level here. I'm really curious to see what will happen in the next few weeks. However, I think that there can be some pullbacks, at least in 3 waves back for a wave B, maybe even wave 2. So when we will get this pullback, I think that the US yields could obviously should rise a little bit, and this could allow US dollar to come a little bit higher after recent weakness. Now, if we look at the euro dollar, to give you the perspective where I think that we are currently trading, well, we are most likely going to complete this wave C or wave 3. I'm not sure if this is a new bull run of a new impulsive cycle, or was this only a 3 wave recovery, a contrary movement, and we go back to the downside. What I know is that most likely we will see a pullback in minimum 3 waves. So that could be way forward, could be something else. But in either case, I think that there is a limited upside and that we potentially could retest this 102.50, 103 level. Also, there was a divergence on the RSI, which also suggests that bulls could be slowing down. I have another wave count here that I just put together. It also shows very nice bull run, potential impulse, but even this one, even if it's a very aggressive bullish count, even this one suggests that we could be slowing down for this wave 4 after a completion wave of an extended wave 3, which could be in late stages if we consider that we have some overlapping price action here. So clearly that's not very strong bull run like it was here back at the start of November. So in my opinion, we could be facing limited upside here. Also, if we take a look on dollar yen, well, dollar yen has seen some very nice reversal here. We've been talking about this potential limited upside few months back, and so far we can see a very nice clean 5 waves down, breaking this trend line. So in my opinion, we have a top in place. Even if just temporary top in place, you should be aware that this is a 5 waves down. So if you have 5 waves down, and even if this is going to be just a very big pause here, well, you still need 3 waves like an ABC formation to complete a correction, because that's a minimum substructure of a counter trend price action. So I think that after next current rally, we should see limited upside and then further weakness. Now, also, since I mentioned very big important levels, well, notice where this dollar yen actually stopped. Here was, I believe, the previous intervention from Bank of Japan back in 98, and we failed up there and we are coming down pretty aggressively. So I really think that we might have seen some top here and that there can be much lower levels after a pullback. Now, since I mentioned that drop from the highs was in 5 waves, we know that this, even if it's a bearish structure, these bearish structures should be retraced by 3 waves before downturn can resume. So that was a very nice waves 1, 2, 3, 4, 5. You have now a broken trend line. that is confirmed. Also, this reversal is confirmed by smaller 5 waves from the lows. So typically this suggests that low is in place and that you are stepping into the wave A. So watch out now for a 3 wave recovery. Now ideal resistance after any rally should be around 143.30. So that's at former wave 4. So I think that we could see these levels, let's say, in the weeks ahead, or maybe this December, from where ideally we will see another very strong push to the downside. Now let's take a look on gold. Even gold signals that we could be slowing down this bull run for a bit. Notice that I can count 5 waves up here from November lows, and this very strong drop after non-farm payrolls report. You can see that the US dollar came to the upside. Gold is falling here from August highs. So in my opinion, we completed this rise and we are now in a corrective stage. So if that's the case, again, normally I will look for a retracement of at least 38.2% compared to the previous 5 wave rise, and typically we'll look for a retracement all the way back to the termination point of a former wave 4, which is at 1729. Now this is a very important level, especially if we consider that was also high here back from October, that on October that turned into very nice support here then in November. So I think that this is a pretty important level where I want to see um, this bulls to fight this level and potentially turn back to the upside here. Okay, so for now, I think that yes, it's a potentially uptrend, but in the short term, I just think that the consolidation period could take the price slightly lower. Now let's take a look also on crude oil. Now crude oil came very nicely to the downside. Now we are again facing this potential trend line support of this wedge pattern. So this whole corrective phase obviously may not end anytime soon, because you have 5 waves down from the highs from since March. So I think that's still only wave A, meaning more weakness should occur after a wave B rally. However, there can be some very nice and solid recovery if we will find the support here. There was also, as you know, White House said that they will try to fill their reserves when the price will reach 67 to 72 dollars per barrel. So we are basically approaching towards this level. That's why I think it should be quite important to watch, especially since it goes perfectly with this Elliott wave price action. Now, if we take a look also on the 4 hour time frame, a little bit closer look. Well, if you are tracking a leading diagonal, the ideal structure in this legs of waves 1, 3, and 5 will be in 5 waves, while in ending diagonal, you will see a 3 wave structure. So don't be confused to see a 5 wave drop here into wave 5. Notice that we are already seeing wave 5 now coming into some potentially very nice support. As I said, 67 to 72 dollars per barrel could be ideal support based on fibs levels, based on this higher degree trend line. So in my opinion, despite the very strong drop, there could be some price stabilization this month, and ideally we will see a reversal higher in 3 waves. Now finally, let's take a look on the S&P 500. If you're following our analysis, then you will know that I've been tracking 2 wave counts for the last few weeks. Now the first and primary wave count is still that maybe that's an ABC setback, and that price could be actually back in bullish mode. But it's very hard to say that we are back in bullish mode since this trend line failed to be broken. Okay, so in my opinion, we still have to be careful and just be aware that we could see slightly lower prices, potentially even retest of the lows. Also, watch out the wicks. Notice that that wicks has came to these extreme levels of optimism in 2022. So we are at the lower side of this range, which makes sense, and it's not a surprise that actually S&P 500 is turning to the downside right now. So I still have 2 wave counts on the main screen. Now, first, as I said, is an ABC, but I want to see this channel broken to make sure that we are headed higher. Now, the second and also very important wave count is actually more complex correction, ABC, wave X, and another ABC. So there are 2 zigzags and wave X is in the middle. So what I'm looking at here is a potential very strong drop down into wave C. So even this one is still not confirmed, but what I like about this latest price action when looking at the 4 hour chart is that we have a pretty aggressive sell-off here away from that daily trend line resistance. Okay, so this very strong sell-off suggests that we will see more weakness, even if just short term. I think that there is actually room for 3750 free and 3700, where you have the 61.8% retracement. So we will see what will happen down there. It's a very important do-die zone. If we will bounce away from it in impulsive fashion, then I think that bulls still have a chance to break that, to break out of this channel. If this support will be taken out, then unfortunately we are most likely headed back to the lows, and then I would bring on this wave count. So notice that based on both interpretations, I think that in the short term we could see 3750, 3700 as a set. Okay, traders, thank you very much for attention and hope that you enjoyed this video. Talk to you soon. Bye.